It's now confirmed. China's latest plan is to collapse the US dollar's peg to oil. As Wall Street is ignoring Powell's warning heading into FOMC. What could go wrong? This is dangerous. How China is using its lockdown to collapse the US dollar and its status as a global reserve currency. This is more than meets the eye. Because petrodollar. It was agreed that oil can only be priced in US dollars. That helps cement the US dollar as a global reserve currency. This couldn't come at a worse time because strategic petroleum reserve has been drained to extremely low levels, while China has been buying cheap Russian oil for a very long time. They are well stocked up on their oil reserves as they have shut down their economy by using lockdown as an excuse to end its consumption of energy. What do you think they are preparing for? Why does the dollar index keep on falling? Why oil stocks are still at all-time highs? Why this is a suckers rally before the next crisis event suddenly creeping out. I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get it into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? Saudi Arabia says open to settling trade in other currencies, namely in Chinese yuan. Saudi Arabia is open to discussions about trade in currencies other than the US dollar, according to the kingdom's finance minister. There are no issues with discussing how we settle our trade arrangements, whether it is in the US dollar, whether it is in the euro, whether it is in the Chinese yuan. The world's largest oil exporter is seeking to strengthen its relations with crucial trade partners, including China. The kingdom is a pillar, a petrodollar system established in the 1970s that relies on pricing crude exports in the US currency. During President Xi Jinping's visit to Riyadh last year, the two countries agreed to boost coordination on energy policy and exploration. During the trip, Xi Jinping said that China would make efforts to buy more oil from the Middle East and also wanted to settle that trade in the yuan. We enjoy a very strategic relationship with China, and we enjoy the same strategic relationship with other nations, including the US, and we want to develop that with Europe and other countries who are willing and able to work with us. We are investing heavily in these countries and will continue to look for opportunities to invest. Al Jaddan said, "It's very important to bring stability. Do you know back in 1974, A deal was signed between the US and Saudi Arabia to funnel Saudi petrodollars into US treasuries. It was agreed that oil can only be priced in US dollars. Petrodollar helps cement US dollar's global dominant status. Right now, SPR was drained to fight inflation around the world. If US really needs oil for emergency, US is in a position of weakness. We may be forced to pay any price for crude oil or pay in other forms of currency, which could be a major problem as the slippery slope leads to the path that ends the dollar's dominance in global trade. What happened to the dollar? The dollar notched a stellar 17% gain during the 3 quarters of last year. Buoyed by demand for its safe haven status amid an adverse economic environment marked by 40-year high inflation and a stock market slump. Chinese lockdown and market crash. Think who controls the lockdown and market in China. In addition, the Currencies appeal was burnished by the Federal Reserve's aggressive interest rate increases, which boosted the yield on the greenback. So why is the dollar falling? The tide has been turning in recent months. A sustained moderation in inflation has tempered the odds of further Fed rate increases, while the reemergence of China's economy from lockdown restrictions has helped spark a rebound in the emerging market assets. These factors have diverted investment flows away from the US dollar, fueling its decline. The greenback is extending losses in January, after sliding almost 8% last quarter in the worst 3-month slump in over 12 years. A weaker dollar raises the cost of imported goods, which would eventually feed into more inflation in the US. For if dollar gets weaker, commodities cost more. If oil is getting more expensive, why not produce it more independently? We are, but we are also selling it to other countries, just as how the SPR was drained. U.S. oil production growth unlikely to meet forecasts for 2023. Access to capital to increase drilling is a significant issue facing U.S. oil companies, and it's one of the primary hindrances to growth. Companies experience unforeseen cost growth in 2022 and are thus increasing capital expenditures to account for cost increases, rather than expanding drilling activity in significant ways. Difficulty obtaining the materials necessary for oil drilling, for example, tubular steel products, and difficulty retaining labor have also hindered U.S. oil production growth. One executive commented that even if the government removed all of its regulations facing oil production, U.S. production would only increase by 10% because there aren't enough people to fill the necessary jobs. It is likely that these factors will continue to hinder production growth in 2023. Complying with government regulations remains an important reason why drillers aren't expanding as fast as they otherwise could. But it is no longer the most important factor. When government regulations are applied stringently, or government regulations are in the state of flux, firms are less likely to drill beyond what they absolutely need. Many firms feel that the government regulations are still a significant hindrance to produce abundant, low-cost energy in the United States. Price volatility impacts drillers' willingness to drill because when oil prices are highly volatile, as they are now, a producer has no idea how much revenue his barrels will bring in. Therefore, producers cannot plan for the future. All of these factors indicate that U.S. oil production will continue to grow, but at a slower rate in 2023 than it grew in 2022. In 2022, U.S. oil production grew at a rate of about 600,000 to 700,000 barrels per day. If growth is slowing, it seems unlikely that production will grow by the 960,000 barrels per day the EIA forecast for 2023. U.S. oil production could be flatlining at about 12.1 million barrels per day in 2023. This proves the supply chain issue is still not resolved for 2023. This is exactly why oil stocks are still close to their all-time high. Because inflation could be roaring right back after the recession. Why is this a sucker's rally? One way to read this is that rate hikes are priced in. Look at December's rate hike. It was a non-event in the markets. That suggests to me that markets are expecting a moderation strategy for the Fed. There's some lower expectations for stock market returns in the short term. But we see pretty clear expectations and optimism for returns in the next 12 months and even 10 years. As you can see, Wall Street is fully pricing in 25 basis points on February 1st. Plus, they are completely ignoring Powell's words that they raise it to 5% to bring inflation down to 2%. What if it's a 50 basis points? What if inflation can't keep on falling and remain at 5%? As the oil price won't fall. What if 5% Fed funds rate is not high enough to kill inflation? Remember the feeling back in April or August last year. In order for a massive crash, the narrative has to change. Just keep your cash ready and be patient. And wait for the next crisis event that will release fear to shock the world. And here is my client's collaboration book. Such an amazing book. It's with all these amazing authors. I'll just show you the front up close. And I'm going to show you the back part here. So I'm going to show you mine now. Rainbow Focus. And I'm going to show you the back part here. And my client Teddy Eazzy's book, Wicked Pussy Perfume. It is an erotic novel, such an amazing book. So if you'd like to order a copy, it will be in the description below so you can place your order. It makes such an amazing Valentine's Day present if you're looking for that special gift for the special someone in your life. It's so incredible. A book is such an amazing gift to give. If you order a copy today, you will get a special good boy from me. You are such a good boy for watching my video right till the end. Bye.